In this video, we're going to look at the new Bitcoin ETFs that have been recently approved by the SEC for trading in the US. And we're going to look at how those compare to the prior ETFs. So the new ones are allowed to actually own Bitcoin. So these were approved on January 10th. They commenced trading on January 11th. So they're very new, very little track record in terms of price action. But these new funds are allowed to directly own Bitcoin. And this was not allowed in the prior generation of ETFs, which were introduced in 2021 in the US. When a fund can actually own Bitcoin, it should have lower fees, and that seems to be what is happening so far. And it should also be able to track Bitcoin better. And the reason is because the old old ETFs, they could only own futures, future contracts, and those are agreements that allow you to buy or sell Bitcoin at a future date. But since the ETFs weren't allowed to own Bitcoin, they would have to continually roll over those contracts, and that's essentially like creating a new trade over and over whenever those new contracts expire. As you know, trading generally incurs fees, so these older ETFs had higher fees than what we're seeing in this new generation of ETFs. An example would be the popular ProShares Bitcoin Strategy ETF, BITO. It has a long history of trading, and pull that up here. And does substantial volume. You can see here averaging about 14 million a day, 24 million right now after we had this spike recently. But overall, it does lots of volume. So that volume is always a key thing we want to look for as well. But let's get to the new one. So BITO has a 0.95% fee per year versus the Bitwise Bitcoin ETF. It has the lowest of this new version of the ETF, and it's at 0.2%. So you may not think that's a huge difference, 1%, but if you compound that over time, it can actually amount to a huge amount of money. And if you have a large amount of money in Bitcoin or that you wanted to invest in ETFs, then saving 0.7% a year, that can account for a fair bit year after year. So far, it's done pretty good volume too, 4 million on average. The ARK21 shares Bitcoin ETF also has a low fee, 0.21, a little bit higher volume, averaging. Remember, we're only talking about a few days worth of volume because these were just introduced. 4.7 million. The Black shares, the biggest volume at 30 million, a little bit higher expense ratio at 0.25%. Fidelity also at 0.25% and 14 million. Van Eck, the HODL fund, 0.25, but very low volume, 0.4 million or 400,000. Franklin Bitcoin ETF, 0.29% and 1.5 million shares. Wisdom Tree Fund, 0.3%, 0.1 million volume so far. And getting into higher fee funds here, Invesco Galaxy Bitcoin ETF, 0.3%, 1 million average volume so far, and the Valkyrie, 0.49% and 0.4 volume. A couple other ones, Hash Index, again, getting into much higher fees now. And Hash Index, almost no volume, kind of averaging about 3,000 shares a day, 0.94%, and Grayscale, which was has been around for a while, 1.5% and 6.9 million. So that's a very basic breakdown of these new ETFs. Again, they don't have much of a track record so far in terms of how well they're going to track Bitcoin, but they should technically track it better than these old funds because they don't have to keep rolling over contracts. They own the Bitcoin, and low fees are one of the main things to look for if you're just looking for a fund that these are all doing basically the same thing. They just own Bitcoin, so there shouldn't be any real difference between them, and low fee is, in my opinion, always the best way to go. Then over time, once these fees or these ETFs have had some time to operate, you can check performance. One may be doing a little bit better, be tracking Bitcoin a little bit better, because just how funds are managed can differ. So that is something to check after a while. It's very hard to compare performance so far with only a few days worth of trading, but that would also be something to check after. Just a reminder, Bitcoin is a very volatile asset. On average over the last decade, it has about a 20% decline every couple months. Even during big bull markets, it can easily drop 20% or more very quickly. So even though the ETFs are easy to get into, easy to buy and sell in any stock account, just be aware that I recommend going through a historical chart, just looking at the big moves Bitcoin has made, not only to the upside but to the downside, and just be aware, is this an investment you are interested in getting into, and does it fit your risk tolerance and investment strategies?